Good evening, ladies and gentlemen. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Sunday, November the 4th, 2012, and here is this week's weekend review. Want to first start by taking a look to see how the indices closed on a closing basis here in some of the key sectors. We had the NASDAQ close down 0.13%, the Russell closed down 0.3%, the Dow Jones closed down 0.08%, the S&P 500 closed up 0.09%, crude oil closed down 1.36%, the oil index closed down 0.07%, the banking index closed up 0.78%. If we take a look at copper, copper was down 2.24%. If we take a look at gold, gold was down 2.06%. And the volatility index was down 2.92%, pulling off a down week off of the little nice movement it had up, a couple weeks ago. Had some nice action to the top side. Now we're giving back some of that action, which is expected since, usually when the volatility index pops up, we usually spike down. But now, we had this nice little pop in the volatility index on Friday, and we have to see if that means something going forward, which I do believe we're going to continue to see these volatile markets. So let's take a look at, let's start by taking a look at the triple Qs on a monthly chart. You can see here the triple Qs has a nice engulfing candlestick here that took place for the month of October, leaving a nice bearish tone after getting rejected from the 50% retracement. You take a look at the Fibonacci lines that I have here. I have it from the tech bubble sell-off from the high that we made over here in 2000, in the year 2000. Okay, versus the highs, versus the lows that we made in 2002. Okay, you have put that Fibonacci retracement in there, and you get a nice little hit up here on the Qs around 70.58 or so. And you can see we got rejected right there, and right now we remain below this key 68 level, which we were looking for that level to hold as support. Obviously it didn't, and now we are at 65.17. It's going to be very interesting if the Qs breaks last month's lows around 64.65. Expect us to get some more selling pressure. Most likely, I would expect down here towards 61.41. That's what it looks like on the target on the monthly. If we take a look at the weekly chart, we have these moving averages right here, the 50-day simple and exponential on the weekly around 63.91. So in other words, that 64 area will be a key level to watch. We break below 64, we have this key trend line right here from the breakout, and that comes in around 62.17. That's on the weekly chart. Top side, you can see resistance up here is a lot of moving averages above us on the weekly around the 66.5 area. Now let's take a look at the daily chart on the Qs. And you can see here the Qs are hanging around the 65 area. We have the 200-day exponential moving average holding as support right now around the 64.65 level. If we start breaking below last week's lows again around the 64.65, expect some selling pressure down towards 64 and down towards the 63 area. You can see we do have some nice support, which I'm actually going to draw this trend line in right now. All right, we do have some nice support on the Qs around this 62 level here. So who knows? If we have some serious selling, that's most likely going to be the target around the 62 level. Why is that? Because if you take a look at the chart, this is like a little consolidation zone right here. Okay. So this was a consolidation zone that took place before we broke out. So we break through all this consolidation. The target would back down here towards the bottom, which that would be a good area for a scalp opportunity in some names if we were to get down there. Obviously, if we hold the 65 level, we're going to be looking for a move back up towards the 67.38. You can see we're at this little support zone. A lot of chop action this week, and from this week's action, this past week's action, and last week's action, you can see there's a lot of chop going on. So, and on the percentage closing basis of the week on the indices, you can see that there wasn't really much, wasn't really any index quite standing out. The banks were strong a little bit, but aside from that, that was about it. So that's how the Qs are looking. If you take a look now at the S&P 500. Starting off first via the SPX. One thing that I mentioned to you guys before was on that quarterly chart of the S&P, where every candlestick counts for 3 months. All right. 1 second. So where every candlestick counts for 3 months here, you can see this was a breakout we had last quarter. And now you can see that if we break back below this key level, which I'm going to be watching going forward, this 14, this, what levels here? This 1410 area, 1408. All right, it's actually this 1410 area, 1409, whatever, around that zone. If we break back below that level and start holding, then we break below 1400, and we start holding below 1400, we could get some selling pressure back down towards 1350. Obviously, if we move back to the top side, we're going to be looking for a move back up towards the 1460 area. But right now, I mean, looking at the S&P, that does not seem, like that's an obvious scenario. So right now, we're back in this little downward channel that we were able to draw on from this little pivot point right here, from this key inflection point right here, this level and that level. You can see we're back inside that channel. And to clean the chart up a little bit here, I could take off this little zone that I have. All right, and you can see here the next support level really isn't down here towards around 1390. If we break below that 1400 level, 1390, some support around 1365. We have the 200-day simple moving averages around 1380 on the SPY. And if we do sell off the bottom of the channel right here as well, will be a target down towards that 1390 level. So it matches up. Resistance 1430 on the S&P cash index here, 1430, and then 1435.50. All right, then if we were to move higher, then we'll have another retest. Well, we'll have an official retest of this little trend line break up here around the 1450, which will still be putting in lower highs if they were to do a little snapback rally all the way back up there. But we take a look at the ES. The ES is telling us a different story. All right, you guys know I've been tracking this ES pretty well, especially using my little system that I have here that I try to show you guys. And one thing to take note of was that we got the little bounce that we were expecting off of the back test of the little channel range right here. All right, remember how in the previous video we were talking about how we can get a nice little bounce off this area because this is a consolidation break, and this is a little back test of that little consolidation channel that was at this little angle. So we did catch some support here. Remember, they were trapping some longs. We highlighted the fact that you can see all these wicks in here below this key area. All they're doing is not trapping longs. They're trapping the shorts. A lot of bear trap scenarios going on down here. Then we had that nice little buying pressure that came in on Tuesday. Got smacked. On Monday. On Tuesday, we had that nice buying pressure come in. Got smacked right back down on Wednesday. Thursday had a nice little powerful update, and then Friday right back down. So you can see how the volatility is increasing here, and that's one thing I've been mentioning, how we've been having these little lower lows, but at the same time we've been having these higher highs, just taking out highs, and this is the volatility that we're experiencing right now. All right, kind of looks like a little megaphone pattern to the downside. You got your little down move and a little higher highs, little megaphone action right there. So anyways, volatility is definitely up. You can see right now the futures are down $1.75, which is nothing. Obviously, we'll see what happens tomorrow. I mean, if we start breaking below 1390, this area, my target is going to be down here towards the bottom of this little channel range from when we were bouncing back here from before. All right, and that's going to take us down towards 1370 if we break back below this little channel right here. Then we're going to have this little whole range to play with. And you guys keep in tune with these videos, and you guys will see how it plays out and how I track it via my system and key levels that the market trades around. So I mean, keep an eye on this 1400 level, keep an eye on the 1390, and we'll go from there. If you take a look at the weekly chart, all right, you can see that the weekly chart is back inside this little range that we had right here. Then we broke down and got back above it. So if we hold below 1410, all right, which I told you guys on the S&P cash index, that was the key level to watch. We hold below 1410, that will not be good. All right, want to see us get back above here. You can see that on the weekly chart. All right, we're at this little key steep trend line. Let me take off the studies here so you guys can see a little bit cleaner. You can see where we are at this key trend line from the lows back here in October to the lows that we made back here in June and right here. So if we break below this trend line, we start holding below. Next support we have is back down here towards 1360 on the S&P 500 futures here. Let's take a look at the monthly. Same thing. All right, little engulfing candle there on the monthly, and then some support down here around 1380, 1390 or so. All right, so if we take a look now at the Russell 2000, the IWM. The IWM downward channel still in play. Let me put the studies back on the chart. All right, you got that little bounce back to the top of the channel like we were expecting. However, on Friday, you can see they sold it right back off on that little gap up, and now we can come right back down towards this moving average here and towards the bottom of the channel around 1380. Keep an eye on the 81 level. The 81 you can see here is the key level from this little band of support. we start holding below 81 earlier in the week, we can expect the IWM to continue selling back down towards the bottom area, down towards 79.80 or so. Take a look at the weekly chart. Weekly chart, we're right around these 20-day simple moving average. The 50-day simple moving average is right here, right around 79.67. All right, but you can see the main thing that we got to be of concern is showing some concern right now is the fact that we're back below this key resistance level, which should have acted as support, and now it looks like a little trap level. Looks like a little bull trap action above this 82 breakout that took place. So the longer we hold below 82, the more I will have to, assume that we're going to move back maybe down towards 76. Obviously, we have some support levels before that level, but we have 79. Then we have some support around the 77 area. Then we have 76. We have some minor support right here around the what level is this right here? Around the 80.5 level. That's going to be the key level to watch next week. 80.5 on the IWM based off this weekly chart. 80.5 and then the 79.67 area. Take a look at the monthly chart. Monthly, still hanging around this little top side of the range. You can see how this little area is usually a nice resistance area that that institutions, investors usually get short. The Russell 2000 up here towards this 85 area, as you can see, keeps on getting rejected. So it's a strong band of resistance. All right, and if this was to be like a little quadruple top area right here, we could definitely get some nice selling pressure. So we're gonna have to wait and see. It's obviously elections next week. So it's going to be pretty volatile, and it's going to be a lot of action. You guys stay on your toes this week, guys. Take a look at the dollar futures chart here. You can see the dollar futures chart broke out. I was expecting the dollar futures to kind of get rejected like it's been doing here, but of course it surprised a lot of people. That's why the market has a crazy reversal on Friday, just from the strength of the dollar. And the jobs number came out. The jobs number supposedly came out better than expected, and therefore I guess there's not a need for stimulus. They buy the dollar and the whole shenanigans, and the dollar is strong. So if the dollar continues to go higher, watch it to catch some resistance around this 81.50 resistance band. That comes from this little whole zone of resistance right here, as you can see in the chart. All right, even at 81.25, and that'll be an area where we'll be looking at some of these commodity stocks again. If you just take a look at the dollar weekly chart, you can see all it's doing is bouncing right back up. You can see it's still going to have some resistance around this 81.5 area. Take a look at the monthly chart. We had a little failed bull flat that took place. We sold off, and now we're coming right back up. May want to come back and test that resistance around the 81.43 area. That's how the dollar is looking. You could take a look at the volatility index, the VIX. The volatility index did break out. All right, we caught that breakout. Now it rallied all the way back up, pulled back, like we explained how every time the volatility pops up, they fade it back down. They fade it back down. Only difference now is that we're actually fading back into this prior resistance, which is this is like a back test area. So therefore, we had the little move back down, and on Friday when volatility was gapping down, they bought it right back up, and this may be the little pivot low. That's going to be our little breakout, pull back, buy area where you go along and put a stop at the low of this candlestick right here. And that's going to be the higher low that's going to set this thing off. So it's going to be very interesting. We've got to watch this volatility index for sure. If the volatility index breaks back above 18, starts holding above 18, we could be in for some really volatile selling pressure. We'll have to wait and see. Weekly chart, sideways, and that's what the VIX looks like. Let's take a look at gold via the gold futures /GC. Okay, gold had a little breakdown. You can see last week, I had bought the gold call options, I believe, on it was last Friday, not the Friday that just passed, but the prior week on the 26th. All right, then I sat through it all week, and then it tried to break out when the markets reopened up, and that didn't help it out, and therefore we had the news come out. We had the news that came out on Friday with the jobs number, and gold sold off. It may have some minor support right here against these 200-day moving averages. We'll have to wait and see. But really, until gold now gets above 1,700, I'm not really bullish on gold at all. Obviously, you want to make sure that if you're looking for buying opportunities to maybe average in or start accumulating some gold down here, that would be good. But really want to see gold show some type of strength before I try to allocate some capital there to put it to work. You take a look at the weekly chart. The weekly chart's a little bit interesting because I thought I was going to get a pull. I thought I was going to get some buying pressure off this little moving average right here, but it pulled back and, probably did a little shakeout. And who knows? We'll see if the buyers step in. It is going to have some nice support down here around 1642 from this little consolidation zone. See, that'll be the breakout, the kind of like the little back test right here. So maybe one more week of selling pressure in gold, and then that next week we could buy it right back up. All right, at least for a breakout, pull back test support, and see if it can get a nice little bounce higher. That's one trade that I'm watching for to see if that sets up. If maybe gold gets some more selling pressure early next week or so. All right, so you can see the monthly chart still remains in a nice little uptrend on the gold futures there. All right, so let's take a look now at. Let's see, I wrote down some notes here. Let's take a look at the GDX. All right, and the thing with the GDX is looking weak. You can see the GDX was in this nice little consolidation of one of my channels here. All right, and I was expecting it to break out, and it did look like it was going to break out. But one thing that was kind of weird was the fact that the gold miners were actually showing more strength than than the physical GLD. All right, and usually one thing's going to happen. The gold's going to, usually something's going to happen. Either the gold miners are going to sell off or gold's going to reverse and start going up. All right, and this scenario so far looks like the gold miners may sell off. So remember, this is a little downward channel, a little slight downward channel at an angle here, but it's the same thing as a little channel breakdown. All right, imagine if it was sideways, the same thing that breaks down. So if this thing breaks this little lower area and starts holding below, say, 49, look for the miners to get some selling pressure back down. And, if they do get some selling pressure, we have some good levels that we're going to be watching to pick some up. And we'll talk about that going forward if that takes place. Take a look at the weekly chart. See the weekly chart, the miners got rejected at this 54 area on the GDX, and then take a look at the monthly chart, and you can see why that area is a heavy resistance zone, because you can see back here in 2010, all right, that was a heavy support zone that broke down that 55 level. So really, until we get above 55 on the gold miners, these things could just be fading right back down. It could be forming, working itself in a little downward channel right here. So we really have to wait and see what's going to happen, but expect volatility in these, in the precious metals for the fact we have the dollar breaking out now and just a lot of mixed signals. Volatility's picking back up. The markets are like they're on the edge of breaking down. A lot of action, guys, and you really want to make sure you watch it, position on top of your game. Let's take a look at copper futures. All right, copper futures are back inside this little consolidation zone. You can see this was the consolidation zone that they had broke out of. This little 3-month consolidation. We're back below that $3.55 level. If we break below, if we trade lower, we are going to have some support around 345. But obviously, holding below $3.55 on copper will not look good, because this will make it like a little fake breakout that the support for the back test for the breakout did not hold, and then we could just continue fading right back down slowly. One stock you could take a look at as well is to kind of gauge the sector is FCX, and FCX, try to get a nice little bounce, because you can see here how it's just chopping around right now. But FCX is one stock that I'm going to be paying close attention to next week to see if it holds above this 38.64 level, or if it tries to break down. If it breaks below 38.64, I do think it'll be a good selling opportunity, just for the fact that copper is looking weak. It's one of the main stocks that people watch when they're watching the copper sector. All right, and kind of trying to measure the strength of the copper industry. FCX is one that people watch. You take a look at the weekly chart of this stock here, and it has a head and shoulders pattern on it in play. And I have it highlighted here. And I've been watching this, since June, and actually had this pattern there since June. And so far, it's not really playing out because it hasn't broke the 30 neckline. But you can see how it's kind of setting up that little nice pattern. This could be telling us something. So this is one stock that I'm watching, for the short term, for the intermediate term, for the long term, just as a gauge. And just watching to see if this thing was to start fading down. This was to break 30. That could be telling us something's not good out there. All right, so that's that. That's copper, FCX. Let me make sure I go over crude oil. Look at crude oil futures /CL. You see here, crude oil futures are, now that they held below $94 a barrel and they broke below this 87.91 area, holding below 87.91 obviously is not good. You can see how it was consolidating in this little range for about 2 weeks or so, and when we broke a little bit down below it on Friday. All right, and crude oil hanging below $85 a barrel and then breaking below 84 could take us back down to 81. I do think that would be an opportunity to start maybe picking some crude oil up or some of these energy stocks up that have gotten beaten down. So we'll see how that sets up, but definitely something that we're going to be watching. We're going to be watching some of these, the whole commodity sector because the dollar index looks like it has a little bit more upside to the top side before it gets to its next resistance level. So therefore, if some of these commodities could come down a little bit, they'll be giving us good buying opportunities. So we could buy them at the same time that the dollar futures lines up to be at that resistance level. All right, so that's what we're looking for right there. If you take a look at the weekly chart on crude oil, you can see it's at some of this little support area. All right, but really the next main support on this one isn't down. On the crude oil is maybe down here towards like say 82. So if this was to continue selling, and it was to sell off another $2.75. I do think that would be a good opportunity to pick some up for for a little quick trade. All right, take a look at the monthly chart, and again the monthly chart, like we've been highlighting, this is setting up for a big move as it's in this nice little tight triangle. And whether it breaks out of this pattern early or that bounces right back up and chops around, I'm looking for crude oil to have a big move in sometime in the year 2013. And right now, I'm going to be honest, I can't tell you if it's going to be to the top side, or it's going to break down to the downside. Obviously, macro and global, conditions it's going to affect what crude oil does. So we'll have to wait and see for that. So that's how crude oil is looking. If we take a look at the euro dollar now, I wanted to make sure I cover this with you guys. Again, take off the studies. If you guys remember how I've been tracking this, all right, you guys could go back and see my previous videos, and I've been tracking this pretty well. You can see here that this little downward channel that we had here that broke out are obviously setting up for like a little bull trap inside the euro right now. You can see here we broke with this little consolidation. We broke out. We got rejected right. This is one of my key trend lines here. We have not been able to get right back above that little channel. And so far, it looks like we have this little trap scenario. And, the euro could sell off a little bit more, but if the euro sells off some more, definitely want to be watching this little downward band down here to see if we hold. If we don't hold and we break back below 127, we can be looking for some serious selling pressure in the euro. That would be a little failed breakout with a bull trap and a break of a little bottom channel support. All right, and we have some clues here that we were waiting for, but this euro could be setting up for some serious selling pressure, and I'm saying that right now with what I see on my analysis. But we'll have to wait and see how this plays out. But definitely going to be keeping you guys posted on the euro on the end of day reports going forward for next week, because we have some serious signals that could be setting up right here on the euro. All right, along with the dollar trying to break out now. And that's how that's looking. One thing that I did want to mention was, the banks, the BKX, the banks. They're hanging in there. You can see that the BKX is a little consolidation right here between this 51 and 49 level. You take a look at the weekly chart. The weekly chart's has been getting rejected so far from this 200-day exponential moving average here. And right now it's consolidating. But if we don't break out higher, we consolidate. This is going to be a dead money sector. If this thing just does nothing here. I don't trade the banks. There has been a lot of movement in the banks. Goldman Sachs and Citigroup have been the stronger ones out there. But I mean, this little sideways action right here against this moving average, that's a lot of chop action that could be setting up here going forward if we don't break out this little range between 52 and 49 on the banking index. I think there's going to be more opportunities for intraday trading action in the metal sector. And that's just something I'm looking for. But the BKX is trading sideways right now. You definitely want to be paying attention close to like the specific names. You can take a look at Citigroup. Citigroup's one of the stronger ones out there, still hanging in there. I put on the moving averages and the studies in here. You can see Citigroup still in this nice little uptrend. Goldman Sachs is one of the stronger ones out there as well. A nice little uptrend. You can see it has some resistance right here at 126. But some of the weaker ones out there, Wells Fargo, this is one of the weak ones. I forgot about Bank of America. Bank of America is not a weak one. It's pretty strong. But, this one, have to see what it's going to do at this 10 level. $10 is the 10 level is a key level on the stock. If it could get above 10 and hold, that would be good. But you can see here how it's it's coming into this little resistance zone from back here in March. All right, so if we if we get rejected right here, expected to pull back and maybe trade back down towards 950, maybe back down towards 898. We'll have to wait and see how that one sets up. And that's about it, guys. Just a little regular overview of the indices. Obviously, tonight we have our live chart session at 9:30 p.m. in the chat room. I will be there. If you want to check it out, go to mywallstreettv.com, type in the password SMART. That's where we'll be looking at our individual stock plays that are setting up for next week and kind of formulating a game plan. And I hope you guys enjoy the video. And that's about it. Again, if you want to see how we trade the markets in the morning and come in the chat room at 8:30 in the morning and see how we set up, you want to make sure you go to wallstreettrading.com, fill out the form on the right-hand side of the home page to sign up for the free trial for My Wall Street TV. You can listen to us trade the markets in real time as we help coach you guys through trades and generate some killer ideas that we've been having lately. And that's about it, guys. Hope you guys enjoyed this little video here, and see you guys tomorrow in the chat room at 8:30. And if you're going to be in the chat room tonight, I'll be there at 9:30 p.m. going over stock ideas. Have a great weekend, guys, and enjoy the rest of your night.